Well. Hello, everyone. I don't know if you can hear me. Hopefully you can. We are looking, as you can see, it's a live account. First and foremost, data. It's live. I don't need this. I'm just looking at that. Basically, what I'm doing is, it's very simple. This red square, it's the lunch hour for November 15, 2024. This is the 150 macro New York time, and then this will be the 250 macro New York Times. Okay, this right here is the first presented uh, fair value gap on the 1 minute chart during the afternoon session. So this is where I focus the most. Today's Friday. I'm not gonna trade today. I'm just reading price. I'm probably gonna see what I say what I think it's gonna happen, and then if I'm wrong, I'm wrong. And if I'm right, well, guess what? I was right once in a blue moon. Anyways, if you're seeing this or not, well, if you are seeing this, obviously, right, it's a good thing. Thank you. If you're not, this is simply working as a diary for me. So, with that being said, again, we have the MNQ C2024 contract for futures. And let's look at the price. The time right now is 3 p.m. New York time. Price has just hit the bottom of the first percent fair value gap during the afternoon session. So maybe I should type in first presented FVG. And let's put it to the right and in the center. There we go. Okay. My bias is short. They should start dropping. And now we just look at price. That's all that we do. The blue lines are actually past new week opening gaps. That's why I don't have them, because the current one it's way up around 2900, I believe it was. I have the macro. It's been a crazy day today. Actually, it's been a crazy week. Um, Today it's been down what, over 500 points, the Nasdaq. Um, right now it gave a little bit back from the 150 macro all the way to the 250 macro. It gave some back, but wow, it's crazy. No, like I said, my bias is short. I'm not deviating for that. Is there a possibility that I'm wrong? Yes. Why? It's the afternoon session on a Friday. Very simple. Okay. That's why I'm not gonna press a trade. I'm just looking at price. That's all I'm doing. Okay. Price getting rejected from the mid portion of the first percentage fair value gap. Let's see if he holds. Let's give it some time. if I was to take this trade, how would I do it? Where would I place my stop? I think I would, you see, this is the mid portion of that first presented. Then you have a fair value gap right there. Let me highlight it a little bit more. Make it a little bigger. Right there, you have a fair value gap, right? So if I was to be trading this, and I know it's, I'm gonna call this low probabilities just because it's Friday. Um, if I was to enter short, I probably would have used that, and then the stop I would put it above this up the up close candle right there, and that for some of you that is what 67 284. That's about what 17. No, Jesus, come on. Yeah, about 17 pips, right? On a stop. And it could be, if you're trading a mini, a micro, I'm sorry, that's about 35 bucks. But that's what I would do. Now, this is pretty self-explanatory. That's the lunch highs, right? If this was to go the other opposite direction, that would be my target, the lunch highs. But right now, I'm just looking at price. You see, it's Friday afternoon, and that's about it. Okay. See, I would have been almost stopped out if I would have gone into a trade. And just on this candle on my, I could have, there we go, stopped out, right? If I would have gone short, again, it's Friday, um, it's 3 o'clock in New York time. So what does usually happen? Could this be profit taken? It could possibly be. Now look, keep in mind what I told you, right? What would have been my target if this was to go high, lunch highs? That would be my first target, lunch highs. If this was to continue higher. Right now, it's a tough, it's a tough afternoon. This, if you look at this, this is a good setup. This is a good setup. So for example, um, why did it turn? I believe this area here coincides with a opening range gap, and I think this is a 25%. So this was 0, 25, then you have 50, 75, and then you have, so I have it delineated with, wait, where's my, it's right here. You see these green lines? That's what it's delineating. Okay, that's what it's delineating right there. And I'll show you it's on the 4 hour. And let's go to here, regular trading hours. So take these ones off, so that way we because I have a lot of stuff on my chart. This is an end dog. That's not what I'm worried about. But this is, let's do this. Let's do it this way. And let's put on a different color that we can easily identify. Let's do orange. So that's the high of this gap, range gap. And then this is the low, right? So if you put a fib in those two lines, the other way. So keep in mind this is this gray line and that gray line and the yellow. Those are the 50, 75, and then 25. Okay. So now that we have that, let's go to the 5 minute. Actually, the 1 minute. That's the one I was. Right. So this one is the fib 25. See, that's the fib right there. You see it. Fib retracement. You see that? So this setup right here came down in between the 25 and the 0. And if you look at it, it gave you a little bit of a retracement. So what happens when you have price going there, comes down, makes a low, a lower low, breaks. That's displacement. The short term high breaks it. Price comes back, leaves a fair value gap. Price comes back. What time is that? 4:30. I mean 4:30. 2:30 New York time. My times are in New York time, but I don't live in New York, so I might get confused sometimes with the time frames. This is gonna drop. This will go short. Everything's okay. Let's continue with this. Um, and then it rallies. Why does it rally? Because it has to set up the next macro. Keep in mind, I'm not teaching anything. I'm just trying to. I'm literally just expressing this to myself as I understand it as of November 15, 2024. That's all I'm doing. I am not trying to teach anybody. I'm not trying to be a guru. I'm not trying to sell a course. None of that crap. I don't. None of that stuff. I'm just reading the price. That's all. I'm looking, looking. Okay. So this pattern, what I've noticed is that it happens when price hits a certain target, or when price takes liquidity and makes a high, or when it gets to an fair value gap, either high or low. Then all you have to do is wait for the displacement, break the high, the short-term high, look for the subsequent um, fair value gaps that it leaves, then wait for time, and then go. Now, the way I use the macros is this. So the macro will set up the time before the macro, let's say that, okay? The time before the macro, okay, will set up the macro rally or drop. What do I mean by that? So for example, um, again, my personal understanding, okay? Look at this. Let's see. Let's look at another macro, which is this is 150. Let's look at the 1250 one. So you see, this is perfect. 1250. Okay. So you see how this time, this candle right here happens at 1250, right? Right when the macro is going to start. So price drops, right? But then price rallies, okay? And then it starts to move down. You see that? Once it drops, okay? So what a lot of people, what I used to do before I kind of realized this is, oh, it's a macro, it's dropping, let me chase the price, and then this move here will take me out. No. And then I realized, okay, that's probably not what's gonna happen. What's happening? It's basically it drops, then it rallies, it goes back to where? To a fair value gap. At what time? Right in the middle of the macro. And then starts to move. There's a little bit of a displacement there. Retracement, drops, and then drops all the way to the next macro. See? That's the way I'm using them. So the reason why I was gonna go short on here, why my bias was short, is because I saw this. Okay. I understand it's Friday, so once again I understand it's Friday, and I could have been wrong, just like I admit I was wrong because price is just moving sideways at the moment. Um, but I was here. I looked at the screen and I said, look at the time. Okay, it's 2:30 p.m. in New York. What's the next macro? 215, 250, right? So I said, oh, okay, that's the first presented. This is the first presented fair value gap for the afternoon session. I said, okay, price is gonna go there. And then what I want to see is I want to see it rejected and drop. Okay, it went up, it extended to take these highs here. And then it did drop indeed. And then it went back up and this one didn't take that high. Yes, it did by a bit. Okay, and then it dropped again, and that's the reason why I was thinking it was gonna go low, maybe to touch the bottom of the opening range gap that I showed you with the fib earlier. But price is just gonna move sideways for the rest of the day. That's what I'm thinking because it's Friday. It's 3 p.m. But that doesn't stop me from learning and reading price. Um, I don't have any money in a trade right now. Not interested. Just looking at price. It's rejecting out of those past new weekly opening gaps. I'll show you what those are in just a second. Those are just notes that I have from his last space, ICT's last space that he did. It was really good. It's long. All of his videos are long, but there's a lot of gems in there. So look, this is the 1020. So right now we are right in between the low of the new weekly opening gap low from October 25th and the low from October 20th. So that's what this is. That's that's what we're doing. Okay. Um, that's what I wanted to show you. Take the fib out because I already talked about that. Again, the orange lines, they're just an orange opening range gap from November 5th, I think it is. Good. So now let's go back to the 1 minute and let's read the price. Is it a lot of lines? Yes, it is a lot of lines. I can hide some of them. Um, can I hide them? How can I hide them? It is windy today here. I mean, in the beautiful big state in the West Coast. And it is windy today. There we go. Price is going up. There's another macro. He talks about another macro starting at the 315, right? I think that's what he says. Starts at 315 and he runs all the way to 345, and then you have the MOCs, market on close orders. And then what I'm gonna do is, see, look at that. I usually study the AM session, which is this. I'm on real trading hours, so this is the start of the morning session in New York. As you can see, I'll show you. I'm gonna lose this right now, but as you can see right here, yesterday's day at 4:14 New York time closed up here, and then it opened this New York morning session right here at 7:58. He says, and I truly believe I'm not complaining, but I can see how I would have gotten chopped up if I would have gone for the 70% chance of filling up to half of that open range gap. I more than likely would have taken that trade, and the reason for that is because I would have been seeing this um, and new daily opening gap, and then I would have seen this boom, boom, boom breaker, right? And then that fair value gap mixed with this, I would have gone expecting that. That would have taken me. So, and that would have been a losing trade. Now, this, my purple squares, they're always gonna indicate first presented fair value gaps. So now let me clarify something. When I'm saying that I would have lost that trade, it's not because my bias it was long for the day, no, but it was just if I was to trade the 70% chance of filling the mid of the opening range cap, then at that point it would have. But my bias has been short. I know he talked about it on Twitter today that I don't know if he took that trade, but he mentioned something about the first presented fair value gap was holding strong, and as you can see, it did. Look at that, right? And then drop, and then in here you're gonna have a right here you have a macro at 10:50 New York time. Now look at it with what I was saying. The macro sets up the time before the macro sets up the macro to go down or short or to sync with the bias that you're trading. Look, I'll show you. So let's take a look at the 1050 macro. Let's mark it. Okay, this is the 1050 macro, right? From the moment we opened, that's a good trade. It started dropping. Then price started mingling around, right? Moving sideways. Look what happens before. Before the macro, price sets it up. It goes up, takes those relatively relative equal highs, and then it drops, right? Price drops. There's a gap here. Price goes back into the gap at what time? 11:30, right? And then it keeps dropping, and 11:50, right? That's the next macro, correct? It continues dropping, and then you have the lunch hour, which usually something like this occurs where it moves sideways. But that's what I'm trying to tell you. So the time before that sets up the macro, and then to sync it with your bias, and that's what I've been doing. That's what I how I've been trading it. That's the morning session. See how price is just playing around. Doesn't want to take those highs, but it doesn't want to drop. That's why it's good. I don't have a position on. And let's see if the theory works for the last macro of the day. Should, no? Is it gonna set it up? This macro involves the MOC, so I usually like to do that. Price is holding. Price drop. Rally. Held. Rally. Holding. Let's see. Launch highs usually have liquidity. Launch highs usually have very good liquidity. Am I on regular trading hours? Yes, I am. So go back to electronic. Let's look at yesterday. Yesterday's trading was nice. Yesterday's trading was actually pretty good. I took a nice 17 pip. Prior to. It's all set up. Launch highs, launch lows. I trade the afternoon session. So price goes up, price come back, first presented fair value gap. Price goes up, price drops, doesn't take the low from lunch. Price rallies. At what time? At what time is this rally? Hmm? At what time? Not not this rally. At what time this drop? Let's look at this drop. At what time does this drop occur? At 150. What is that? It's a macro, no? Right? So at 150 is hitting what? What's setting up the macro at that point? The first presented fair value gap. So price goes up and then drops. It doesn't take the low, so price goes up, right? And it leaves these lows here, right? During the 150 to 210 macro. Then price does this, moves sideways, right? What is this? What time is this? This is a macro. My macros are always going to be highlighted with a gray square. Okay. What is this? This is a macro. What time? 250 to 310 New York time. Look at the price. Look what price is doing, right? Price between 210 and 250. Price is just moving sideways. Drops, then it goes back to the fair value gap, then drops, then it goes back to set up what? To set up the macro right there. So price goes up, hits the first presented fair value gap, and then drops. Okay, within here, I took 17 pips yesterday um, for one of my combine accounts. Nonetheless, um, this is another opening range gap that hadn't been filled. Yesterday, he almost got to the bottom of it. It did it during Asia. Okay, so this was good. But then if you just keep doing that, let's see what the this is the 310. So let's go look at the 350 macro. Okay, look at the 350 macro. Okay, price drops, price rallies in the macro. What is it doing? That high, that liquidity, and there's a gap right there. And for the support and resistance, it coincides with that, with those lows, with the lows from lunch, right? And then sets it up, and then it drops. If what I like to see in this case is I like to see this: a displacement leaves a gap, and that's my entry. Then drops. Okay, and that's just literally what happened. I'm not cherry picking. You can actually go check all the Check every single day and do the same thing and you'll be able to see it. Highlight the macros. This is 2 o'clock, November 4th. No, I'm looking for 9 a.m. Okay, let's go here. This one. This is this week's opening gap, new week opening gap. So here we go to the 9:30. Even with news, right? Look at the 9:30. That's 9:30. This is lunch high, lunch low. Okay. One. Price goes up, price drops. Okay. Price goes up. Where does price go to take that liquidity? At where? At 150 macro again. Rallies to take that liquidity, and then it sets up the macro to go down. Then look at the 250. We're gonna look at the 250 macro on this day. 250, right there, right? What is price doing? Then that price rallies, goes up, then it drops. The reason why I don't have a first presented fair value gap on this one is because there was not one on the 1 minute time frame that I feel comfortable with. Okay, so I didn't actually go ahead and mark it. That's the reason why. So 250 rallies, drops, right? That's a good drop. Look, that's a good trade. Price goes up, the macro displacement leaves a fair value gap. Price goes into it, and then it drops. What is that? Worst case scenario, 187. That's 20 pips right there. But if you hold a little more, almost 30 pips, 30 handles, right? In a matter of what? 55 to a matter of 10 minutes. Okay, right? In a matter of 10 minutes, 87, 30 handles in a matter of 10 minutes. That's not bad. Okay, one micro, one e-mini contract, it's about 600 bucks. One day, right? Then you look at the next macro, right? Let's look at the 350 macro and see what it's doing. So 350 macro drops to get liquidity. This was MOC. This is the only macro I don't feel comfortable trading because of MOC. So this will probably be the only one I don't trade, and then obviously Asia. But all the other macros during the afternoon and the morning session I like to trade them. So look, they're still ranging. Just gonna come back and touch it again. Then it's gonna reject. I'm just waiting to see what MOC, the macro with MOC will do. That's all that I'm waiting for before closing the stream. Let's see what's price doing. Ah, today's trade in the morning was phenomenal. Today's trade in the morning was phenomenal. It was really really good. That this first presented fair value gap that he introduced, that ICT introduced in his 2024 mentorship, works. If you backtrack it, if you backtest it, if you do your research on it, on any asset class, um, you'll be you'll be surprised. You can see it on ES. Um, just for the sake of it, let's look at it because price is not doing anything anyway. So look, this is 930. On some it's more pronounced, but on others it's really really good. It's a small one right there, right there. See it? See that? So could have been done, right? You enter there, your stop goes above here because you know you're going short. But if you would have entered there, right? That's what 936. Part of my math, but that would have been what, five handles at least on a micro, on a micro, 5 times 5 is 25 bucks. On a e-mini contract, that would have been 5 times 5. That would have been 250 bucks, and that's literally, oh my god, 250 bucks in 2 minutes. For a lot of people all around the world, 250 bucks is a monthly income. Okay, 2 minutes, right? If your stop would have been here, yeah, that's a sizable stop. From 36 to 41. Is it really a sizable stop? It's 936, 941. That's five handles. Price goes up, price goes up, right? And here's the other thing. Keep in mind my how I work the macro. Look at this. This is the beauty of it. That's the macro, right? Yeah, that's fine. Okay. This doesn't happen on a macro. That high creates liquidity. Whoever shorts here and didn't take profit got trapped here. So the macro is being set up here to take that liquidity and then drop, right? So a lot of people were saying, oh, that's a bad trade because you would have gotten stopped out here. Okay, yeah, you're right. If you would have entered here, if I would have entered here and take five handles on an E-mini and take 250 bucks out of it, I would have been happy with that. Okay? I'll tell you right now, I would have been happy if I could do that consistently every single day. 5 handles on the ES. What is it? 250 times 5 days. That's what, 1,250, I believe it is. A week extra income on 2 minutes? Oh, dude, I'm done. But what if you just wait for the macro? And now you understand that the macro is being set up to either take liquidity or to run liquidity above highs in this case because the price is it's low. It's the bias is short. If you just wait for that, okay, fine, let it come back, enter to the macro, short it, put your stop here. Now your stop, it's less by a handle. That could be first target. So what's that? 936, 929, that's 5. Or hold for the remaining of the day. That would have been what? 936, and we, oh, 2877 on the S. I don't know my math, but that's about, Jesus, I'm really bad today with numbers. 936 to 877. That can't be right. Oh yeah, okay. That it's about 60, roughly about 60 handles. One E-mini, if you can afford it. Contract. 50 times 60. How much would you have made? 3 grand in one day. If you trade a micro on that, 300 bucks in one day. See? It works. Check the macros. Check the first fair value gap, the first percentage, and then you'll see. Let's see what this is finally doing. Oh, look at that. I was wrong here, but as I said at the beginning, my bias is short, but I do understand if it goes the other way because of the day and the time of day. Weekly already came down a lot. Could this be taking profits? Could be. Could MOC send it down? Could be. All I'm saying is the macro is about to start, so it's being set up. My bias, like I said at the beginning, I maintain it, is short. That's why I'm reading price action. But look at that. We're inside the macro. You see the spike? That's MOC. That's why I don't like this macro. 'Cause MOC can do that. That's just the name of my channel. Relax. I'm not. I don't sell a course. I'm not a guru. I'm not doing any of that stuff. It's just the name of my company. That's all it is. So my LLC, so that I can, you know. You can see it in any futures market, I should say. Lunch high is about to be taken. Come on. And wow. Done. Lunch highs have been taken. This is a perfect example of why at the beginning I said I'm not taking a trade, even though my bias is short, right? Um, Continuing with the bias of the week, I said I understood the reason why it went up, or the reason why it could go up. It's because of the time of day and the day. It was when I started the stream, I think it was 3 p.m., close to 3 p.m. New York time. And I said it's Friday, November 15, 2024. It's the end of day. So that could have been a possibility. And I said lunch highs will be target. And look at that. So I think that will be all for this portion of my diary for today. Again, this is not to teach anybody anything. This is literally for my own benefit, to use it as my diary. That's all it is. If you enjoy it, good. If you don't, that's good as well. Whoever sees it. With that being said, thank you very much. You always gotta be thankful for what you do. Um, Thank you, Lord. Amen. Have a good one, guys. Nice weekend.